Good morning, everyone. This is Ken. Today I want to take three pieces of news that came out over the weekend, and instead of treating them as separate headlines, I want to connect them as one continuous flow. Because when you look at them together, you start to see something very important about where Tesla is headed next. Let me start with the conclusion. Tesla has already begun shifting into its next phase, and that shift is happening faster, quieter, and on a much bigger scale than most people imagine. The announcement of the 821-kilometer range Model Y in China, the expansion of Tesla's Robotaxi program into 5 additional US cities, and the market reaction to the approval of Elon Musk's $1 trillion compensation package. These three stories are not random. They form one straight line. And today, I want to dig into the essence of that line. First, why are these stories important? What matters is not the headlines themselves, but the direction they point to. Tesla is no longer just a car company. The company is steadily transforming into an AI-driven network platform. If you look closely at the details behind today's news, you can already see that transition unfolding. So let me break down the background quickly. In China, Tesla suddenly announced a long-range rear-wheel drive Model Y with 821 kilometers of CATL range. It uses a 78.4 kilowatt-hour CATL battery pack and pushes efficiency to the extreme. The acceleration is not sports car level, but that is not the point. It is a strategic model built entirely around long-distance capability. Meanwhile, in the United States, Tesla revealed that Robotaxi operations will expand into 5 major cities: Las Vegas, Phoenix, Dallas, Houston, and Miami. Each of these cities has predictable weather data, high traffic density, and strong Tesla adoption. They are ideal test beds for early commercialization of autonomous ride-hailing. And then we have the big topic of the week. Elon Musk's $1 trillion compensation package has been approved by shareholders, yet the stock price fell. Why? The market is concerned about dilution, about concentration of power, and about the divergence between institutional investors and retail investors. But if you look at the compensation criteria themselves, they tell you exactly where Tesla intends to move next. AI, robotics, autonomous mobility, energy, none of these are automotive categories in the traditional sense. Now let's dive into the analysis. The new 821-kilometer Model Y is a technical statement, a rear-wheel drive configuration with a single motor reduces weight and losses, making pure efficiency possible. China is a market where long-distance capability is not a preference, but a requirement. The country is large, intercity travel is common, and consumers expect range to be a core selling point. This is Tesla competing where it has the most competitive leverage: electric efficiency, optimization. At the same time, this release is perfectly timed. Tesla sales have softened roughly 13% in recent months in China. Other EV makers there are loading vehicles with massive 100 kilowatt-hour batteries to gain longer range, but that adds price, weight, and inefficiency. Tesla achieves 821 kilometers with only 78.4 kilowatt hours. That is not a marketing trick. That is technology leadership. Now let's look at Robotaxi expansion. This, in my view, is the real center of Tesla's long-term strategy. Every car sold becomes a potential revenue-generating asset. Owners can put their vehicles on the network and earn money. Tesla earns a share, and once the network grows large enough, the economics shift from hardware sales to software and fleet utilization. This is why the choice of cities matters. It is the quickest path towards scalable data collection and real-world validation. FSD version 14 has made significant advances. Many users report more human-like behavior and more confident decision-making. The system is no longer slow or overly cautious. Tesla wants real-world performance that matches urban driving expectations, and with every mile, the network becomes smarter. To me, Tesla is moving from validation mode into deployment mode. Now, let's talk about the stock reaction. The market often moves on emotion and short-term risk, but the compensation plan itself is built around long-term achievements. If Tesla reaches the thresholds defined in that package, it means the company has successfully scaled robotaxis, AI products, energy storage, and robotics. These are high-margin, high-growth segments. So the drop in stock price does not reflect the real long-term significance of the approval. It reflects emotional uncertainty. Now, let me shift to my personal view. When I look at these three stories together, I see an unmistakable signal. Tesla is accelerating toward becoming an AI mobility network. The efficiency leap in China shows Tesla is still far ahead in core energy technology. The Robotaxi expansion shows readiness for commercial rollout, and the compensation plan reveals Tesla's internal map of the next decade. None of this is random. It is intentional and interconnected. And this leads us to a bigger question about the future. The 821-kilometer Model Y is not just a Chinese model, it is a preview of the next generation of EV efficiency. If Tesla brings this to global markets, it could eliminate one of the last remaining objections to EV adoption. Range anxiety becomes irrelevant when you reach this level of performance. Robotaxis, on the other hand, have the power to reshape society. Mobility becomes a service. Transportation becomes part of a global AI network, and Tesla becomes a platform company, not a manufacturing company. The company that controls the network controls the industry. That is the direction Tesla is aiming for. So I want to end with a question. Out of today's three stories, where did you feel the biggest glimpse of the future? Was it the ultra-efficient 821-kilometer Model Y, the multi-city Robotaxi expansion, or the deeper message embedded inside Elon Musk's compensation package? Let me know your thoughts in the comments. I truly believe that understanding these shifts is essential for long-term Tesla investors. The share price today does not represent the potential value 5 or 10 years from now. What matters is which business segments will dominate Tesla's revenue in the future. Thank you for watching today's video. If you found this analysis helpful, please consider subscribing. I share daily insights on Tesla, AI, and the evolution of mobility. Stay informed, stay curious, and enjoy life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.